Hi, welcome back to Daily Conversations. This is Mr. K.
This is Derek.
Yeah, and the date today is October 25. The time now is 16 minutes past 6. And our topic today is talking about the risk and consequences of high level sovereign debt. So, before we start, please click the like button and subscribe to our YouTube channel. Okay, here we go. Yep, so Eric.
Hmm.
Yeah, so for this sovereign debt, uh,
Yeah.
we can also call it as national debt or government debt, right?
Yes.
Mm. Yep. So yeah, this is like the government want to borrow money from it can borrow from other countries and also can borrow from uh the the people in that country, right?
Hmm. Yeah.
Yeah, so we call it internal and external.
Hmm.
Yep, and actually, um, yeah, I'm still quite confusing about these specific terms, and yeah, especially about the consequences of uh a very high level of sovereign debt.
Hmm.
Yep, and then um, yeah, and of course we know that if a country have a very high level of debt,
Mm-hmm.
um, um, maybe it will have some crisis like the debt crisis. The
Hmm.
country is unable to pay uh, the repayment
Hmm.
of the debt. But it seems like country can also uh, uh, keep trying to get more and more loans
Hmm.
to repay their debts.
Hmm.
So um, what do you think about this? Is it a thing that very risky if a country keep borrowing money to pay back
Hmm.
the loan?
Hmm. If you look, if you look at the individual and business,
Hmm.
do you think it's risky for us to doing that?
Yeah, it is.
Hmm. Why?
Because the money that we loan, uh, uh, most of it will go to the repayment, and
Okay.
the money left, which we can use is uh lesser and lesser.
Hmm.
Yeah.
Hmm. So, hmm, if you can, that if you always can refinance, if you always can do the refinancing,
Mm.
and you can always get new loan to fit
Yep.
the old loan,
Yep.
then do you think is there any problem with that?
Um. Yeah, there will be no problem if you can assure that you will get money every
Hmm.
time.
Hmm. Okay, so this is for individual and business,
Yep.
and when we look at the sorry, when we look at the government,
Mm.
mm, there is a difference. Individual and business, if they want to get new loan,
Mm.
they must have something they can uh, they can they can use for mortgage.
Mm.
And for government oh, government also have something can use for mortgage. First is the the currency reserve, the foreign currency reserve.
Mm.
Mm. Mm. But if you imagine the company want to borrow money
Yep.
and the company don't have, sorry, the government want to borrow money and the government, okay, if if a government has a strong, have a very strong foreign currency reserve,
Mm.
so the government can use that money to borrow more money.
Yeah.
Mm, but for example, if you have, let's say, if you have 1 million US dollar, okay, so maybe you can borrow, like mm, five 500K thousand US dollar, and you
Mm.
use that one
Okay.
million, or you use that 1 million US dollar and pay for it.
Mm.
Mm, but do you think you can use 1 million US dollar for mortgage and borrow another like 1 trillion? You can't, right?
Mm. Yep.
So it comes to the point. It also has its limit. Mm.
Mm.
If it is very strong, then the balance sheet of the central bank, the asset can always cover the liability. Then there's no risk. There's no risk about the high sovereign debt, right?
Mm. Yep.
Mm. So when we talk about high sovereign debt, it's actually the government, they
Mm.
borrow the money in advance, and now he don't. Uh, now the government don't have enough asset to cover the liability.
Oh.
So
Yep.
that
You see.
means we have the debt.
Mm.
Mm. Mm. Of course, you still can borrow money, and
Mm.
you actually use the trust, mm. and uh, yeah, you use the trust of the country
Mm. Yep.
to
The
borrow money.
credits of the country.
Mm. Mm. So yeah, and credit is something that can be used up and can be finished. Mm.
Mm. Yep.
So when the trust has gone, uh, uh, there are no country, trust your country anymore. Then you
Mm.
can't borrow money. Mm.
Yep.
Mm. So mm. and uh, why we will have high level sovereign debt? Do you have any clue of that?
Um. Okay, I think the first point that they want to borrow debt could be like they don't have enough income. Yeah, just like an individual, if he want to use a specific amount of money, but his income didn't fulfill his spending, so he want to borrow.
Mm.
So for a
Borrow.
country, maybe
Oh, okay. Yeah,
a,
continue.
a country maybe the uh yeah, the income of the country cannot fulfill the country's spending, so they want to borrow.
Mm. Okay, so you actually means the budget, not enough budget, right? The
Yep.
budget, the budget deficit.
Yeah, yeah.
Mm. Mm. And government have the annual financial budget,
Mm.
and they'll plan how much money the government needs to spend,
Mm.
and they need to finance for many projects. Mm.
Yep.
And also And the government also need to invest money, need to spend some money in the particular area. For example, mm, to support the primary school, the primary government school, and also like the secondary school,
Yep.
and also uh, uh, need, need to pay the salary for those mm, uh, public employee. I mean, the employee work in the public company.
Yeah. Yeah. The government servant.
Mm, mm. And the government also need to run some government-based company. Mm. Previously in Malaysia, there is a famous company called 1MTV. Is it?
Yep.
Mm. Yeah, Satu Malaysia company. Yeah. Mm. Okay. Mm. Uh, Actually, the main cause of high-level sovereign debt is, I can imagine. Okay. Uh, I can summary mm, this viewpoint.
Okay.
The government do the investment, like a business, they borrow money and do the investment and uh, build the railway, build the MRT, and build the transport system.
Okay.
And some other. But the government cannot get back the money through the taxation. So investment, we call investment because we put in the money first, and we need to ensure we can get back the money in future.
Yep.
Like for example, if you provide a higher level of facility to your people,
Okay.
in the country, and their living standard increase, they can more focus on specializing in their specific area. They can earn more money.
Yep.
So your investment, your return on investment is actually higher GDP, higher GDP of the country,
Yep.
because everyone can work hard. They don't need to worry about like the water. They don't need to worry about they don't have a shower, but they don't have the shelter. They don't have a place to live.
Yeah.
Yeah. So government need to do this. The government need to allocate some money in this and uh uh to fulfill to fu- mm, or we can say to implement the policy is made.
Yep.
Implement the policy need money. Yeah. Yeah, you need to put in action to force people to do that kind of thing. To follow
Yes.
your policy.
Yep.
But the allocation have been messed up. The government overestimate the benefit of the investment. So government actually overspend the money initially. And the government cannot get back the money through the taxation, and also Yeah. If the government had run the government-based company like Singapore, hello,
Yeah, yeah.
and Singapore has many government-based companies, and those companies can earn the money, allowed to earn the money. So, their target and the organization goal is not like to serve the country. I mean to serve the people, in the country. Like for example, in Malaysia, we have government hospital, right?
Yep, yep.
And you just need to pay like one ringgit and very little amount.
Yeah, and even for surgery, we only need to pay maybe like 100 or 200.
And you can imagine this kind of hospital. It's always suffer in loss.
Yep.
So the government need to support this government-based hospital. Government need to pay them salary, need to pay them to pay the facility.
Yep.
Need to pay the money to build the hospital.
Yep.
And also need to pay the money to buy the machinery.
Yeah, those equipment.
The medical equipment, and also need to buy the drug, the medicine.
Yep.
And sometimes the medicine is very expensive. And also subsidize the wheelchair to the patient. So all these costs come from the government. This is not come from free. And the government expect by providing this kind of service, and our country people can be better off, so they can earn more money.
Yep.
Because they don't need to worry about the medical part, but actually we still need to worry about the medical part, right? Because now it end up a situation many of us cannot get the benefit of the government hospital.
What do you mean actually?
You need to do the queuing, is it?
Yeah.
Yeah. So and but we still can okay. If one is really rich, and they wouldn't go for this government hospital.
Yeah.
And and this government hospital is actually support those poor people.
Yes.
So the facility is actually want to support the people in the bottom. In the bottom. And the government need to finance this from the rich people through the taxation.
Yep.
Because this kind of hospital is always running in loss.
Yes.
Okay. So okay. Go back to the Singapore. In Singapore also have some government space company, and the Singapore government allow the company to earn some money, so they have some profit.
Mm.
And the
Yep.
profit can use to pay the debt. Okay, can use to pay the debt.
Yes.
So it's actually like the government. The government he do the investment like a private company.
Yep.
He builds a facility and provide this service to people, and he charge fee.
Yep.
And if the inflation increase, maybe the charge will also increase.
Yep.
Yeah. So it ensures that the government has enough money to pay the debt. And also it ensures this kind of action can be sustained. The government can invest more because
It
the
is making
government
money, right?
The government would end up in the situation that has a high level of sovereign debt, and the government cannot borrow money anymore in the future. It will end up like this situation.
Yep.
So actually, when we talk about the sovereign debt, we have two types. We have gross sovereign debt. We also have the net sovereign debt.
Oh, okay.
Actually, the gross sovereign debt is the gross value of debt. It's the gross value of debt you borrow from other country, and also
it's the actual amount of money they borrow, right?
yeah.
Okay.
And the net sovereign debt is after knock off by the asset you pay. That means the investment you have.
Yep.
And you actually can sell your investment to the private company. So we can value the investment. Those investment is earning money. Yeah.
Yep.
So it must have value. And Singapore has zero net debt. Yeah. And this is quite amazing. Besides of that, I think only Finland has zero sovereign debt. I'm not sure. I'm not sure.
So how about Malaysia's? Do you have any ideas?
Malaysia is something like 60 to 70%. I think it's for growth. On that, I'm not sure. Yeah, because I can hardly imagine. I can hardly recall any government-based company that can
make money.
Yeah, they can help government to make money. I can't recall any of them.
Yeah, Eric, just now you mentioned that 60 or 70% of debt. So how can we get this percentage? Is it based on GDP?
Yeah.
Oh, okay.
We divide by the GDP. Mm, mm.
Yeah. Okay.
And like the country in China and like the US, mm,
Mm.
the debt is actually very high, mm,
Mm.
more than 100%.
Yep. Yep.
Mm. And like US, mm, because the advantage of US dollar,
Mm.
mm, every country are using the US dollar to do the trade. Mm.
Yep.
So mm, US, yeah, US, it actually can, mm, the central bank print the money. Mm,
Mm.
the central bank print the money and and buy buy the loan. Yeah, for example, buy the US long-term bond. Mm.
Mm.
So when the old loan expired, the
Mm.
US government don't have don't have enough money to pay to uh, to pay the principal of loan,
Mm.
and the US government will ask the US central bank, yeah, it will ask the Fed, Federal Reserve,
Mm.
mm, yeah, okay, this year we need to uh, this year we need to um, pay the pay the old debt, mm,
Yep.
and because we don't have money, so
Mm.
we also need to refinance.
Yep.
We also finance new loan, a new
Mm.
bond.
Yep.
So I need the permission. I need the central bank permission, um, to provide me money to pay back the the old loan. And we
Mm.
actually I actually can, yeah, I actually want to borrow a new bond, yeah, a new, like for example, a new 30 years long term bond
Mm.
from central bank. Mm. Yeah, so the money I want to use, mm, is actually want to pay the principal of the loan. Mm.
Mm. Yep.
Mm. So the central bank will print the money. Mm. Actually, they don't need to print the money. Mm. They just extend another 30 years, right?
Mm.
Mm.
Yep.
Actually, in the balance sheet, they just change the amount. Like this loan is, for example, 2020 maturity,
Mm.
change to 2050 maturity.
Mm.
Mm. Yeah,
Yeah.
and yeah, because US dollar have 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 the, have its strong value. Mm.
Mm.
Every every country, mm, every country, mm, reserve the US dollar. Every country need need uh need to keep need to keep a lot of US dollar reserve, mm,
Mm. Yep.
in order to do the trade. Mm. Like for example, mm, if you want to buy the oil, the crude oil, you have to mm, you have to mm, you have to do the settlement by using US dollar. You
Mm.
can't use other currency to do the settlement.
Yep.
Mm. And
Most of the country, right?
it is the agreement between, the oil country,
Mm.
like the Saudi Arabia,
Mm.
with the US. It
Mm.
is an agreement.
Yep.
Mm. Now, mm, so for US, mm, of course, US has very high level of sovereign debt, mm, and but the US have its advantage, have its strength. Mm. So he can do this kind of shit thing, and let mm, the people in the rest of the country suffer the loss.
Mm.
Mm.
Yep.
Mm.
Yeah. So yeah, just curious for the US. Yeah, because just now you say when they want to issue bonds, then they actually can print money. So what is the difference between issuing bonds and printing money?
Actually, they are the same.
Oh.
Uh, okay. Uh, Issuing bond is actually mm, the thing can do by U.S. government. This this is not the Fed side. This is not the central bank side.
Mm.
Mm. U.S. government can actually issue long-term bond, but who want to buy the bond? Central bank can be one of the buyer.
Mm.
And those private com- those private company, those public company, and other country
Mm.
can be the buyer of that bond. Mm.
Mm.
Mm. So did I answer your question?
Mm. Yep. Yep.
Mm. Yeah. So if U.S. government it need some money, yeah,
Mm.
it need the U.S. government need new money. It
Yep.
actually mm, can issue a new long-term bond and and ask mm, ask other countries to buy. Mm,
Mm.
yeah, and also the U.S. government also can ask the Fed to buy that bond.
Mm.
Mm,
Yep.
mm. So now the balance sheet of the debt, first, of the Fed,
Mm.
of the central bank. Mm, okay, for example, initially for example, is 5 trillion, 5 trillion asset, 5 trillion liability. Okay,
Okay.
mm. And if the central bank uh buy 1 trillion of the long term bond that
Mm.
issued by U.S. government,
Okay.
mm, uh, there is additional 1 trillion of asset, which is
Mm.
called the U.S. government long term bond.
Yep.
Mm. Mm. And this means that mm, the U.S. government owes central bank this money.
Mm. Yep.
Mm. And on the liability side, it's actually also called mm, also called mm, mm, let's say the finance of U.S. government bond. Okay,
Mm.
yeah. So uh, the balance sheet of the Fed is actually just expand. Mm, yeah, because mm, he buy the bond, so he keep it as the asset,
Mm.
mm, and the Fed will give the U.S. government that money.
Yep.
Mm. That's why uh uh I, I think I messed up already. Yeah. It's uh uh okay. The liability is the U.S.
Mm.
government bond. Okay. Mm. On the Fed balance sheet. Mm.
Mm.
And the asset and asset is actually mm, mm, the right to receive the money, the right to receive the interest, and also right to receive uh, a right to receive the principal, the loan principal back. And this is the mm. So that means the asset is something like a security. Sorry, it's a it's security. So and the U.S. government bond actually can be traded, can be traded in the secondary market. So the Fed can sell the security to the public, and also the Fed can also buy and buy can buy this security, this long-term bond market.
Yeah.
And but do you think it can? US can do this kind of thing forever?
This is a critical question.
Yeah. So, do you think?
Yeah, I think they have been doing this for many years, right? But maybe until one day, they'll have some problems.
Yeah.
Yeah, especially when other countries is getting more and more stronger.
And then,
China. Yep. So there is a decision for other countries whether to still agree to use US dollar for tradings. Yep.
But China is not the country that that using capitalism policy. Yeah. So you may face if uh, mm, if other country decided to use the yuan as primary uh, primary currency to trade, and they may have some risk about about the China government policy. They have some country risk. Yeah. Because China can set the policy without go through the Congress.
Yeah. Yeah.
So you may have some risk inside this, and certainly you may lose the value of I mean maybe you will lose some value. For example, if the China decided to devalue, to depreciate its country, because we know the China is the greatest export export country, right?
Yep.
So if China want to export more, what China can do? Actually devaluate its currency. Yeah.
Yep.
So if you hold yuan, so your currency will be depreciate. depreciated, and you lose some of your will.
Yep. Yep. That could be.
Yeah. And okay, another critical question.
Mm.
Do you think your country, like our country is Malaysia,
Mm.
do you think we can sustain with a high level of sovereign debt, or we can reduce the high sovereign debt in the future?
Mm. Yeah.
Yeah, this is a question to you.
To reduce the debt.
Yes.
So it means that firstly they need to have the trade surplus in order to pay back the loan and not cutting the spending of those necessary spending. Yeah, for example, in for this year, government give incentives to people, and yeah, for myself, I have already got 800 from the government.
Oh, you mean the UBI,
Mm,
Universal Basic Income?
I'm not sure, but we call it BPN. Yeah, it's like the money given by the government. So you
And
can
yeah,
imagine.
yeah,
Yeah.
please continue.
So you can imagine that how big is the spending if this money is given to uh, the whole people in the country. Yeah, maybe some people didn't get the money, but for some people get even more than 800. Yeah, so these are all the spending. So to really decrease the debt, to write off the debt, so it is quite hard for Malaysians to do so. Yep, like just you mentioned just now, our country have too many spending. Like the hospital, yeah, it is always a spending. Yep. Yeah, so to me, I think it is quite difficult.
Then how about like the US, like China?
Oh,
They have more than 100%, of that of GDP.
yeah, that will also be very hard, but yeah, but at least they are a big country.
Yeah.
Big country will have the power and the trust.
Yeah.
And very likely other countries will use their currency.
Sure. Yeah.
Yep.
Okay. Okay. Another question is, do you think we really need to pay the debt?
Okay.
Yeah.
Yeah.
For example, if like the Malaysia case, he cannot pay back the debt
Yep.
already, right? And if Malaysia cannot borrow new money to pay the old debt, actually it is extend the maturity of the debt, right?
Yep.
So can Malaysia default the debt? And he don't want to pay the debt already.
In that case, wouldn't it call it bankruptcy for the country?
Country wouldn't bankruptcy, but we will end up mm, the same consequence that like bankruptcy of individual, because no other country uh trust this trust this country anymore.
Mm.
So they want to trade with them by using their currency.
Mm.
Mm.
And there is uh, there is a organization called IMF, right?
Yeah, IMF.
So yeah, so will they seek IMF for help, and then maybe trying to extend uh the debt?
Mm. Yeah.
Mm.
They can borrow money from IMF. Mm.
Mm.
Uh, but here my question is, mm, the country decide not to pay the debt. Try, yeah, you want to default the debt.
Mm.
They don't want to borrow money from IMF also.
Wow. So I think for Malaysians it is quite hard to do so.
Why?
Um, okay, if you do so, and then how about if the lender is China, one of the lender, and then China stop doing business with you, stop all the tradings, like import export,
Yeah.
then yeah, then you will become an independent country
Yeah.
with a closed
Mm.
market.
Mm. Actually, in his story, there are some countries try to default the debt,
Oh.
but they didn't end up a good a good ending.
Mm.
And finally, they seek for IMF help
Mm.
and repay the money.
Mm. Yep. But actually, the debt level of a country is actually also a burden to the people, right? Because we need to pay the tax.
Mm. Yeah, this is the case if the country have to pay back all the debt. Mm.
Mm.
Yeah, if the country no need to pay the debt, he can always extend the maturity. Zero tax is actually same as like 20% of tax, is it?
Mm. Yep.
Mm. Yeah. And okay, now we can talk about the consequence of the high level of sovereign debt.
Mm.
Since you cannot repay the debt, and in case if you cannot borrow new money to feed the old loan,
Mm.
what is the consequence?
Mm. Yeah, maybe that's called a default, right?
No, that's not a default.
Oh, but now
Yeah, yeah, yeah. I mean, at the end, in the final, it will go to the ending that called default.
oh.
I miss,
Mm.
my, I miss, yeah, in the process, oh, okay, actually, they have two consequences.
Mm.
It's in the process, you have to borrow new money to fit the old loan. But
Mm.
in case there are no country want to lend you the money,
Mm.
yeah. So this is the first thing to come,
Hmm.
and you need to find way to finance the finance the money.
Hmm.
Finance the money. Otherwise, you can't pay back the debt, and you can only default the debt.
Hmm. Yep.
Mm. Mm. So, what do you think the consequence of high level sovereign debt?
Okay, if no other countries wanted to buy the debt of that country,
Mm.
how about the people in that country?
Mm. Yeah, the people in the country still can buy the debt
Mm.
if the people willing to do so.
Yep. Yeah, because the interest of the bond is very high, then I believe that people will still consider to buy the bond.
Yeah, the interest is high. Mm. But do but if no other if no country want to buy this country bond,
Mm.
and do you think this is a lose of uh this is this is the consequence of that? Because other country don't trust your country anymore.
Mm. Yep.
Mm. So actually your currency will drop, right?
Mm.
Your
Yes.
currency will depreciate.
Yeah.
Mm. And based on the game theory, mm, the people inside the country, they actually will try to shift their money, try to export their money, try to exchange their domestic currency to foreign currency
Okay.
to remain the same international purchasing power. Does it
Hmm.
make sense to you?
Um.
Okay, okay. For example, mm, if you know next week, Malaysian ringgit will drop 50%,
Hmm.
what will you do?
Yeah, uh trying to drop the Malaysian's currency.
Huh?
Yeah, trying to change your money into another currency.
Yeah, yeah. So you do so, and other people also do so. And who are going to buy the debt?
But that is only for short term, right? You can't keeping those foreign currency for long.
Mm, okay, you can. Okay, if for example, mm, you can keep all your money in foreign currency.
Mm.
Okay, and if you need to buy something, and the price is based on Malaysian ringgit,
Mm.
you just exchange back and buy.
Yep. Yeah, but
Mm,
but your foreign currency will become lesser and lesser, right?
if okay, okay. If you keep 1 million in Malaysian ringgit,
Mm.
mm, so if Malaysian ringgit depreciate 10%, you
Mm.
still have 1 million yeah, you still have 1 million Malaysian ringgit, right?
Yep.
Mm.
But the
But
value is not 1 million anymore.
mm, this is still 1 million in Malaysia.
Mm. Yep.
But mm, but before the depreciation, you exchange 1 million Malaysian ringgit to, let's say, Sing dollar. Mm.
Mm.
And after that, Malaysian ringgit depreciate 10%, and Sing dollar appreciate 10%.
Mm.
So now, if you convert all your Sing dollar back to Malaysian ringgit, how much Malaysian ringgit will you have?
Yeah, another 10%, right?
1.1 million Malaysian ringgit, right?
Yep.
Mm. So if you can foresee, if you can predict, Malaysian ringgit will drop further in the future,
Mm.
what will you do? Will you just keep money in Malaysian ringgit, or you try to keep most of your wealth in other currency, and you just keep like 1 to 5%, 1 to 5% of your wealth uh, in Malaysian ringgit. So this is for the trading purpose.
Yep.
To buy your grocery and to pay your rental, like that.
Yeah.
So when you earn your income, you you try to maintain the 1 to 5 percentage. If you have more money, let's say, you certainly receive a lot of payment. You certainly receive a lot of payment from your customer, and so your reserve is from 5% to 10%. And you try to calculate what is the incoming payment. For example, the incoming payment will cost you like 3%.
Yep.
So you will okay. The current you have 10%. 10% of your wealth, calculate in Malaysian ringgit, and you can foresee you need to pay 3% for the incoming payment to your supplier.
Yep.
And 10 minus 3 is 7, right? So in case you want to keep also 5%, you want to keep 5% in Malaysian ringgit, and you will transfer the 2% to Sing dollar. Yeah, let's say Sing dollar. So you still have 5%, 5% of your wealth calculated in Malaysian ringgit, right?
Yep. To maintain a percentage.
To maintain the level. Yeah. So, just now you say, just now you say you cannot do the trading. Yeah, it's not true. It's not true. You always can do the trading.
Yep. Yeah.
So why you want to buy? Yeah, why you want to buy the Malaysia bond? Because yeah, let's say the Malaysia government bond can provide you like 6% per annum, but the depreciation is like 4% per annum. So the net return is only 2%, and like U.S. government bond is like 4%, 3% to 4%. So why not you just buy the U.S. government bond?
Right.
Yeah. So the consequence will become high level of sovereign debt. It returns to loss of trust.
Yep.
And loss of trust probably will turn to currency devaluation.
Yes.
And people don't want your currency. And the people in the country, the purchasing power actually reduced. Because most of our goods, most of our material is import from China and also from other country, right?
Yep.
Mm. Mm. So the cost of living, of course, will increase.
Yes.
And actually, this is the consequence to the people in the country.
Yep.
So, yeah, it's no longer the country level problem. It is turned to the individual level problem.
Yep.
Yeah. Mm. Okay, so yeah, I think I have finished my sharing for today.
Yep.
Do you have
Yeah.
anything want to share about it?
No. Yeah.
Yeah. So I think yeah, that's for our today conversation. How did you feel? Did you enjoy the conversation? Please tell us what you think of our conversation. Sometimes we may include one or two critical thinking questions in the comment. It's very hard to answer for most of the people, especially for this kind of macroeconomic related issue. But if you have quote unquote critical question for this critical answer for this critical question, please share it with us. And we are not native speakers. If you found any vocab or grammar mistakes that we made, please also comment to let us know because we want to improve ourselves. Remember to like and subscribe to us. Thanks for watching. See you tomorrow.
See you tomorrow.